Homeowners across America are facing a brutal reality check, losing tens of thousands of dollars in value. The frantic bidding wars, they've completely vanished, and in some once booming cities, prices have literally crashed by over 25% in just a year. Imagine, you bought a home for $800,000 believing in the American dream, only to watch its value plummet by over $200,000. It's a nightmare for many. From scorching hot tech hubs to beloved tourist favorites, once unstoppable markets are now utterly flooded with listings, choked by relentless price cuts, and desperate sellers are throwing in the towel. Mortgage rates, stubbornly high near 7%, are squeezing hopeful buyers right out of the game, while available inventory is skyrocketing by as much as 56% in some regions. What in the world is really going on? And more importantly, what's next for the American housing market? In this exclusive Discover the Nation investigation, we're diving deep into 10 major U.S. cities where the housing market is taking a serious, painful tumble in 2025. Get ready for a wake-up call, because this is hitting closer to home than you think.
Number 10. Fort Worth, Texas. A city that was once the undisputed rising star in the Lone Star State's real estate boom. It was hot, it was happening, but now it's quietly, painfully slipping. In 2025, Fort Worth's housing market is showing undeniable signs of softening, with home prices dropping by a significant 7.3% year over year. Now, 7.3% may not sound earth-shattering at first glance, but consider this. In a city where the median home price once surged to nearly $350,000, that's a brutal drop of about $25,550 on a typical home. That's not just pocket change, folks. That's a new car, a year of college tuition, or a significant chunk of someone's life savings. Gone. So what's causing this unexpected yet painful meltdown? It's a toxic mix of overbuilding, buyer budgets stretched to their absolute breaking point, and, believe it or not, migration fatigue. Fort Worth became an absolute magnet during the pandemic housing frenzy, with Californians and New Yorkers pouring in, pushing prices up an astonishing nearly 40% between 2020 and 2022. But now, that once relentless flow of new residents is slowing to a trickle. And inventory? It's soaring, up a massive 29% year over year, suddenly giving buyers more choices, and leaving sellers desperate, facing agonizingly few bidding wars. Mortgage rates, stubbornly high above 6.8%, have added insult to injury. That once affordable $1,800 monthly mortgage on a typical home now looks more like a daunting $2,400, pricing countless locals right out of their own market. Plus, as remote work policies tighten and companies demand a return to the office, some of those pandemic-era buyers who moved here are packing up and heading back, or simply putting their home buying plans on indefinite hold. This isn't a total crash, but Fort Worth's sharp downturn is a classic sign of a once scorching market finally returning to earth. For savvy house hunters, this could signal incredible deals, but if you bought at the peak, you're feeling the burn.
Number 9. Portland, Oregon. The city of quirky coffee shops, iconic bicycles, and that effortlessly cool Pacific Northwest vibe. But even under the charming, misty facade of this favorite city, the housing market is going through a not-so-hip downturn, leaving homeowners with a serious hangover. In 2025, home prices in Portland have officially plummeted 8.3% year over year. And this isn't just a casual dip. This comes after years of truly explosive growth that once pushed the average home value to a staggering over $550,000. So what's the actual damage now? That's about $45,650 wiped off a typical home's value in just one brutal year. A painful sum that impacts countless dreams and financial futures. What's truly behind this chilling drop? For starters, Portland has seen an absolute surge in listings. And let's not ignore the elephant in the room. Portland's once unstoppable population growth has slowed significantly. After years of Californians and Washingtonians pouring into the city seeking a new life, the trend is now reversing. More people are moving out than moving in, with net migration dropping by over 12% in the last year alone.
And honestly, affordability has become a serious, undeniable issue. Portland used to be the cheaper Seattle, a more accessible West Coast dream, but not anymore. It now ranks among the top 15 most expensive mid-sized cities in the U.S., a brutal reality that has priced out countless first-time buyers and young families. Combine that with rising property taxes and the cooling job market, particularly in the tech and healthcare sectors, and you've got a recipe for consistently softening prices. For resilient buyers, this could be the window of opportunity they've been waiting for, but for existing sellers, Portland's housing hangover is definitely starting to sting.
Number 8. Phoenix, Arizona. Once, without a doubt, one of the absolute hottest real estate markets in all of America. But now, it just got a little too hot to handle. In 2025, home prices here are down a shocking 8.5% year over year. And that, folks, is a pretty steep slide, especially considering Phoenix saw nearly 60% growth from 2020 to 2022. Think about that. Homes that were selling for $475,000 at the peak are now hovering around $435,000, meaning some homeowners are watching $40,000 of their hard-earned equity simply evaporate. So what exactly caused this desert flameout? It's a classic case of overheat economics meeting cold reality. During the pandemic, Phoenix became an undeniable magnet for remote workers and out-of-state investors, desperate for a slice of that scorching growth. But once interest rates spiked, with 6.9% average mortgage rates, the demand dried up faster than an Arizona creek in August. Monthly mortgage payments for local buyers jumped by hundreds of dollars, immediately putting homes out of reach for a huge segment of the population. Inventory has also surged, up a staggering 43% year over year, and homes are now sitting on the market for agonizingly longer periods. Bidding wars? Practically extinct. Even the mighty iBuyers like Opendoor and Zillow, who once scooped up properties like candy, have aggressively scaled back or completely exited the Phoenix market, leaving behind a painful trail of desperate price cuts. And here's another critical factor. Phoenix's worsening water crisis and its brutal, scorching summer heat are no longer just background noise. They're profoundly affecting where people choose to live and where people are willing to make their long-term investments. This is no longer just a nice-to-have amenity. It's a fundamental part of the decision-making process for many looking to put down roots. The dream of desert living is facing a stark reality check. For those who bought at the peak, hoping to flip quickly, the desert heat is now the heat of a rapidly cooling market.
Coming in at number 7, Boise, Idaho. Once the poster child for pandemic-era remote worker migration, where housing prices surged by an eye-watering 70% from 2020 to 2022. It was the it city, the hidden gem. But in 2025, Boise is proving that what goes up must eventually come down. Home prices here are down a significant 9.1% year over year. For a median home that once touched nearly $575,000, that's a staggering loss of over $52,000 in just 12 months. This isn't a correction, it's a profound reevaluation. What drove this dramatic reversal? Boise's boom was largely fueled by an influx of out-of-state buyers seeking affordability and a quieter lifestyle. But now, that migration has dramatically slowed, and many of those new residents are finding that the cost of living, while initially lower than coastal cities, has caught up in many other ways. Inventory levels have exploded, up a massive 51% year over year, leading to a surplus of homes and fierce competition among sellers. The average time a home spends on the market has more than doubled, from a blistering 10 days at the peak to a sluggish 28 days today. High mortgage rates, stubbornly holding at 6.9%, are further exacerbating the affordability crisis, essentially freezing out many local buyers who simply can't compete with the elevated prices and higher borrowing costs. The tech sector, which played a major role in Boise's growth, is also experiencing a slowdown, leading to job insecurity and a chilling effect on housing demand. Combined with the sheer volume of new construction that flooded the market during the boom, Boise is now facing an oversupply issue, particularly in the higher-priced segments. The The allure of the quiet life has been overshadowed by the harsh realities of a market struggling to find its new equilibrium. For those who arrived during the frenzy, hoping for continued appreciation, the gem state is now feeling more like the pain state. At number 6 on our list, Denver, Colorado. The mile-high city, renowned for its breathtaking mountain views and vibrant outdoor culture. But in 2025, Denver's housing market is experiencing a significant chill, with home prices plummeting by 9.8% year over year. For a city where the median home price once soared to over $620,000, that translates to a brutal loss of more than $60,000 in value for many homeowners. This isn't a dip, it's a substantial decline that's impacting a wide range of residents. So, what's causing this mile-high fall? Firstly, affordability has become a paramount issue. Denver was already an expensive market, and the pandemic-era surge pushed prices beyond what many local incomes could reasonably sustain. Even as prices now fall, the lingering effects of high valuations combined with near 7% mortgage rates mean monthly payments remain a significant barrier for countless potential buyers. Inventory has surged dramatically, up 38% year over year, flooding the market with options and severely limiting sellers' pricing power. Homes that once received multiple offers within days are now sitting on the market for an average of 35 days, with many experiencing significant price reductions. Secondly, the tech industry, a major employer in Denver, has seen significant layoffs and hiring freezes, directly impacting a key segment of the buyer pool. The flow of remote workers relocating to Denver has also diminished, as companies push for a return to office and the allure of mountain living loses some of its sheen when coupled with exorbitant housing costs. Furthermore, the city's once booming population growth has decelerated, further contributing to the softening demand. Developers, who built furiously during the boom, are now facing the challenge of offloading new inventory in a buyer's market. Denver's once red-hot market is undeniably cooling, forcing homeowners and aspiring buyers to adjust to a new, more sober reality. The mountain high has given way to a market low.
Halting our descent at number 5, Austin, Texas. The Silicon Hills of the South, a city synonymous with rapid growth, tech innovation, and a seemingly endless influx of new residents. Austin was, without question, America's hottest real estate market for years. But in 2025, that rapid growth has turned into an equally rapid contraction. Home prices in Austin have plummeted by a staggering 10.5% year over year. To put that into perspective, a median home in Austin that once commanded over $550,000 at its peak is now worth over $57,000 less. This is a severe, painful correction that's leaving many recent buyers reeling. So, how did this tech darling fall so hard so fast? It's a textbook case of overhyped demand meeting overbuilt supply, all while affordability reached a critical breaking point. During the pandemic, Austin became the ultimate destination for remote tech workers, driving prices up an unsustainable 70 to 90% since 2020. Developers eager to cash in built at a furious pace, leading to a massive surplus of luxury homes and condos. But now, the tech sector has slowed significantly, with major employers like Meta, Amazon, and Oracle scaling back operations and laying off hundreds. The remote work tide has also receded, with fewer people relocating and many returning to offices elsewhere. This combination has caused buyer demand to evaporate. Inventory has skyrocketed, up an astonishing 56% year over year, leaving sellers desperate and resorting to drastic price cuts. More than 40% of listings have seen reductions, with slashes of $75,000 to $100,000 becoming commonplace. And the relentless 7% mortgage rates mean that a $475,000 home now costs over $4,300 a month to own, far out of reach for Austin's median income. Even the once booming rental market is seeing rents drop by 6%, causing investor panic and a surge of properties on the market. Austin, once the symbol of the American housing dream, is now its most poignant cautionary tale. Overhyped, overbuilt, and overpriced, It's crashing harder than almost anywhere else.
Number 4. Seattle, Washington. The rain-kissed tech giant of the Pacific Northwest, where colossal corporations like Amazon and Microsoft built an empire of wealth and propelled housing prices to astronomical heights. But in 2025, even this bastion of innovation is proving to be far from immune to gravity. Seattle has seen home prices fall by a stunning 12% year over year. Given that the median home price here still hovers around a staggering $775,000, that translates to a jaw-dropping loss of over $105,000 for the typical homeowner in just 1 year. This is a seismic shift, indicating that even the most exclusive tech hubs can face a brutal reckoning. What's behind this dramatic downturn in the Emerald City? The answer lies in a confluence of factors. Seattle's housing market was already astronomically expensive, making it increasingly unaffordable even for its highly compensated tech workforce. The ongoing layoffs and widespread hiring freezes within the tech industry, from major players to startups, have had a direct and immediate impact on buyer confidence and purchasing power. The once unstoppable allure of this tech mecca is being tempered by economic realities and a reevaluation of lifestyle choices. For a market built on peak tech salaries and seemingly endless growth, Seattle's sharp decline is a stark reminder that even the most robust economies can face a painful correction. Number 3. Sacramento, California. For years, this was the affordable refuge for those priced out of the Bay Area, a burgeoning city that promised a taste of California living without the exorbitant cost. But in 2025, Sacramento is experiencing a profound and painful correction, with home prices crashing by a devastating 12.8% year over year. For a median home that peaked around $530,000, that represents a gut-wrenching loss of over $67,000 in value for many homeowners. This isn't just a cooling market, it's a dramatic structural shift. What caused this dream of affordability to turn into a nightmare? Sacramento's housing boom was heavily reliant on an influx of buyers from the Bay Area, seeking more space and lower prices during the remote work era. Inventory has swelled significantly, up 46% year over year since 2024, overwhelming the market with choices and severely eroding sellers' leverage. Homes once sold in bidding wars now sit for over a month, and 36% of all listings have price cuts. Neighborhoods like Elk Grove, Natomas, and Rancho Cordova are seeing big markdowns. The buy now or lose out frenzy is over. Affordability is the real killer. At nearly 7% mortgage rates, a median home requires $3,800 a month, which is just too much for many. But if you look closer, there's a sense of unease settling in across Sacramento's neighborhoods. A big factor? Taxes and insurance costs are rising too. Many first-time buyers who stretched their budgets to leave the Bay Area are realizing that owning in Sacramento isn't as cheap as it looked on paper, especially when you add in skyrocketing utility costs and the ever-present risk of wildfire or drought insurance hikes. The overall vibe in Sacramento? Cautious, uncertain, and very different from the buying frenzy of 2021 and 2022. Locals are waiting for clarity, and the once red-hot housing market is cooling. For those with patience, 2025 could turn out to be the most buyer-friendly year Sacramento has seen in over a decade.
Number 2. San Diego, California. San Diego is California's eternal paradise. Sun, surf, tacos, and some of the most expensive real estate in the country. But even paradise is cooling. Median prices are $875,000, but after years of gains, we're finally seeing a real dip. Values have dropped about 2.1% in the past year, and it could get worse if rates stay high. Inventory is up a staggering 61% year over year, over 6,000 homes for sale, compared to under 4,000 last year. Nearly 40% of listings have price cuts, and days on market now exceed 40. Just 2 years ago, it was closer to 10. Affordability fatigue is real.
A 7% mortgage means $6,000 plus payments, even for dual-income households. The average local income? About $85,000. The math just doesn't add up. The job market is cooling too, especially in tech-adjacent sectors and tourism. Short-term rental restrictions are scaring off Airbnb investors. Despite the sunshine, San Diego is tilting toward buyers. 2025 might be the first year in a decade where patience pays off. But beneath the sunny headlines, there's growing unease among local homeowners, agents, and investors alike. For years, San Diego was seen as crash-proof, the city everyone wanted to move to, thanks to its unbeatable climate and lifestyle. Now, even highly sought-after neighborhoods like La Jolla, Del Mar, and Pacific Beach are seeing multiple price reductions in slower sales. Open houses that once drew a line down the street are now sparsely attended, and coming soon listings are sitting much longer than sellers expected. The city's luxury condo market is particularly vulnerable, with developers offering incentives and fee waivers just to get deals done. The city's economy is still diverse, but with job growth slowing and inflation biting into household budgets, even longtime locals are whispering that a true correction, maybe even a mild crash, could finally be on the horizon. Paradise, it turns out, isn't immune to market reality. Number 1, Las Vegas, Nevada. Topping our list as the city with the most severe housing market tumble in 2025, Las Vegas, Nevada. The shimmering oasis in the desert, built on glitz, glamour, and an ever-present dream of quick riches. For years, its housing market mirrored its casinos, offering high stakes and even higher rewards. But in 2025, Las Vegas is experiencing a monumental crash, with home prices collapsing by an unprecedented 18.7% year-over-year. For a city where the median home price had soared to nearly $450,000 at its peak, this translates to a staggering loss of over $84,000 in value for the typical homeowner in just 12 months. This is not just a correction, it's a full-blown market unraveling, and it's leaving a trail of financial devastation. What caused the desert's housing dream to turn into a mirage? Las Vegas's housing market has always been highly susceptible to boom and bust cycles, fueled by real estate speculation and waves of out-of-state buyers. During the pandemic, it became an irresistible magnet for investors and remote workers seeking a lower cost of living than California. But that speculative frenzy has now completely reversed course. Mortgage rates, stubbornly high at 7%, have priced out a massive segment of potential buyers, especially those who were already stretching their budgets. The once thriving short-term rental market has also seen a significant slowdown due to increased regulation and oversaturation, further dampening investor interest. Furthermore, while the tourism sector remains a cornerstone, the wider economy is feeling the pinch of national economic uncertainty, impacting job growth and consumer confidence. The high probability of a price drop, as high as 48.5% for a 5% or greater decline, underscores the market's extreme volatility. For those who bet big on Las Vegas real estate at its peak, the cards have been dealt and it's a losing hand. The dazzling lights of the Strip mask a housing market that has truly hit rock bottom in 2025. This has been a sobering look at the 2025 housing market, a brutal reality for many homeowners across America. The once unthinkable price drops are no longer just a fear, but a painful reality. What's next for the American dream of homeownership? Only time will tell. This has been Discover the Nation.